Welcome back to the show. I'm your host, Ankur Patel, and today I have a very special guest on the line. We have Lance Rich, who is the Vice President of Underwriting at EBizCharge. Lance, welcome to the show.
Thank you, Ankur. Much appreciated.
And Lance also is on our advisory board, so this is a very special episode for us. We certainly treasure his opinions, and maybe for the audience's sake, though, Lance, would love a quick rundown of how you got to the particular position that you are at today at EBizCharge.
Sure. Well, I've been lucky enough to be in this industry for a lot of years, more than I'd like to admit, but I started in kind of the payments industry in the mid 90s, more on the card issuing side. Started my career at General Electric back in the days when they were more involved in financial services, heavily focused on fraud prevention. And I was the gentleman that would, call somebody up and say, did you just make a $500 charge at Best Buy? After about 10 years at GE, I did a 180 and started working in this payment space for these ISO terminology we use for a company here in Utah that specialized in direct selling and multi-level marketing merchants. And that was an 11-year stint. And that company was eventually sold to TSYS, a large payment processor. And I left the traditional payments world for a couple of years and had the great opportunity to work at Goldman Sachs for 2 years. And after 2 years at Goldman, I kind of came back to the payments industry, and again, lucky enough to work in many different verticals of payments on the banking side, on as a payment facilitator for a large company like WorldPay, and then now my role at EBizCharge, where I've had the great honor of taking us from what they call a retail ISO to a wholesale ISO, which brings that liability for any losses, credit, fraud onto us. So it's a large job, and we're about ready to launch.
Would love to dig a little bit more into that transition because it seems like that would be quite a transition going from retail to wholesale. So maybe if you could talk about what motivated that decision, and then how challenging or perhaps easy in some ways that transition was for you.
Sure. I mean, it's definitely a better revenue model to be on the wholesale side, but then it also brings with it a lot of those risks that we don't have to deal with today. So from a underwriting and transaction monitoring perspective today under retail, that is being done by a third party. So an application is taken and sent to another party for underwriting. When the merchant is boarded, the transactions are being monitored also by that third party. So it's good in the sense that we don't have responsibility for any losses, but it's also challenging in the fact that we don't have a lot of control over how quickly does that merchant get underwritten. What happens if a transaction is held or a deposit is being held? We don't have the ability to necessarily decision on both of those ends. We are the intermediary between the merchant and what we call the networks. So that is it's not the best customer experience at times.
And in terms of making that transition, was that something that meant that you had to forego the retail space entirely, or is it one where you have maybe some sort of graceful exit from the retail business and then move to the wholesale side?
Yeah, great question. So there will be a process where we'll have to convert the retail portfolio to the wholesale side. You can't really be both. You can't really ride both rails. Once we move that one book, if you will, to wholesale, will be a wholesale ISO with that particular bank. You can be a retail and a wholesale ISO with different banking partners, but that's not our strategy. Our strategy is to move to 100% wholesale.
That makes sense, the motivations that you just mentioned. So why don't we take a step back and talk about the payment space? Obviously, fintech has been a very hot topic. It's been, especially in New York, where we're based, it's been an epicenter of startup growth and just innovation. It's certainly where you've seen many unicorns and decacorns get built over the last couple of years. But it would be great, given your experience in this space, to talk about what the current state of payments is. How much, maybe to kind of use an analogy, how much juice is there left in the fintech innovation that's happening in the payment space versus how much of the great innovation is behind us today?
Well, I think there's plenty ahead of us, and I think it's moving faster than ever. I think things that took months or years to happen are happening so quickly, and it's ever changing. There's different verticals that folks want to get into. There's a lot of demand for doing things quicker, but still doing it in a way that is compliant and risk averse. So I think there's Ankur, I think there's a lot still to happen.
And what about the inclusion of AI? Of course, AI has been around for a long time. We used to call it machine learning. Now people are calling it traditional AI versus generative AI. But curious, how much has AI helped with the payments and the fintech innovation that's happened? And then where are you seeing maybe new forms of AI being applied today?
Yeah, I think from my perspective, it's very underutilized, Donker. I think it is something that we're all interested in. We want to learn more about it, but I think it's very, very underutilized. I think there's a lack of understanding about what it can and cannot do. So I think we just need somebody to kind of drive this initiative to help us understand what AI can do for our different businesses.
Why don't we pick one example, one that you've either earmarked or actively working on? It doesn't have to be at your current organization, maybe it could be broadly in the sector, but would love to make this more tangible for the audience around what is one great opportunity where AI is ripe to go and potentially change, and of course, change for the better. But why don't we start with one maybe specific area that you've seen where you're intent on seeing AI really do its magic in the years to come?
Yeah, I think the best example is probably on the risk monitoring or the transaction monitoring side, the piece that impacts essentially all the parties, the payment processor, your customer slash merchant, and even the cardholder. I think that's an area where AI could really make a difference. Being that it's so focused on behaviors and on patterns and what's an anomaly, I see that as an area where we can do so much more with this data. Today,
Mhm.
the environment is very heavy on an individual, right? A risk analyst who is probably utilizing multiple tools to make a decision. And that person could also be operating under the guise of, if I make a mistake, my company may take a loss. My merchant may have a bad experience. So what can AI do to give us? I don't think we can have too many data elements in making a decision. And I think it's a good combination of utilizing both the AI
It's very
technology
interesting because
with an individual.
Lance, I think on that point, ran machine learning in the U.S. for a startup that was doing anti-money laundering and cyber fraud, and this was years ago. This was 7 years ago. But even then, the amount of sophistication that bad actors have in trying to get away with fraud was incredible. It's so sophisticated that it's hard for a human operator without any tooling to be able to detect. And you really need, like basically the good guys need AI anomaly detection, as you mentioned, and other tooling to go and help catch that fraud. And some of that fraud's real time. There's a lot of indicators for those fraud patterns, but you have to catch it real time or as early as possible so you could actually do something about it versus like seeing that pattern months later when you're doing investigation, see a huge loss on your books and you're wondering why that loss occurred. That's a bit too late. And by the time you identify that like vulnerability, I suppose, and address it, the bad actors may have already moved on to other more sophisticated techniques. So this is a really very much a cop and robber type of phenomenon where you do need really good offensive weapons in some ways to catch that fraud real time. Otherwise, bad actors keep getting away with more and more, and that becomes a huge operational risk for the business at large.
Well, and you bring up a really good point too. We need to remember, we hear a lot about AI and what how scary it can be and the things that the fraudsters can do, but also like in your analogy, the cops and robbers, what can we do in our industry to be educated and stay a step ahead? We need to be a proactive team, right? When it comes to underwriting, transaction monitoring, we've got to be proactive, not reactive when it comes to the new trends that are out there because they change all the time.
Agreed, and that's where anomaly detection, finding never before seen patterns in real time, and identifying this is such an anomaly. This is such rare occurring pattern that we've never seen. Let's go and investigate this, or potentially put the brakes on that transaction until we have some additional safeguards that both parties green light for this transaction to go through. And it is very hard, I think, primarily because you don't want to deny too many of the transactions, because then that also delivers a very poor customer experience. So you need to get that balance right of how do you let the good transactions go through while still being mindful of the bad transactions. Of course, in the bad transactions, you may also deny good transactions, but getting that balance right is really, really hard, but also really critical to solve.
Oh, I agree 100%. And that comes down to what's the overall experience of the merchant or the customer and what's the impact to them. Ideally, they're not aware of all those activities going on behind the scenes. And so they're not having transactions that are held up or transactions are being denied that are legitimate. And you mentioned the balance, and it's so true. And like, what's the false positive rate in a shop where we're trying to detect fraud? You don't want to have a needle in a haystack kind of scenario. You want to be reviewing those transactions that are the highest risk and let the other ones go and be as efficient as you can, and spend time efficiently investigating those transactions that don't fit the pattern.
Let's talk a little bit more about underwriting, because that's also a big area, and we'll come back to fraud.
Yeah.
Underwriting, what does the process look like today to bring a new merchant on board, with the wholesale business that you're moving to?
Yeah, I mean, I would categorize it in two different ways. There's the due diligence aspect of underwriting, and then there's a more traditional, what I would call the financial piece of underwriting. So there's the due diligence piece of just verifying who you're doing business with, who's the merchant, who are the beneficial owners, does the social security number check out, is the EIN legitimate, are they on any kind of terrorist watch list, are they on any kind of like merchant blacklist? So a lot of just checking of the boxes. And then depending on risk exposure, size of the merchant, vertical they might be supporting, then traditional underwriting may kick in where you want to see more financial data, like financial statements, bank statements, previous processing history. So if this
Mhm.
merchant's had a previous merchant account, you can see what is normal for them. What's a typical for their industry? What's a typical high ticket, average ticket? How much volume are they doing monthly and annually? There's a lot of factors that go into
Mhm.
that I think AI could really help assist in automating. Because in the industry that we're in today, it's all about how quickly can you underwrite me
Yeah.
with as few
Yeah.
data elements as possible.
Hmm.
And then that becomes a competitive challenge. Like when somebody says, well, over here at such and such company, they only wanted 5 things, you want 10, or they could underwrite me in a day and you're taking 3 days. It's a real balance there too on the underwriting side. And Ankur, it's an industry where it's a bit not archaic, but we've done things the same way for so many years.
Yeah.
I think we've been a bit reluctant to integrate something like AI into underwriting more so than transaction monitoring. Folks are open to it, but I think there's a bit of a lack of understanding of how can AI really help me on the underwriting side.
And I'm very excited by the novel experiences you could deliver, where something took X days. Now all of a sudden, it feels like it's a fifth of the time. It could realistically be a fifth of the time that it takes to underwrite, and you need far less data, and that just makes it a better customer experience. You get known for having different automations built out to make the customer experience really incredible. Going back to what you were mentioning earlier, the KYB portion, seeing if the businesses are on bad actor lists versus the financial underwriting. Today, are those two separate teams? And maybe let's talk a little bit more about the actual processes. So what types of docs get submitted? How do they get submitted? Are there people reviewing it, or are there tools, maybe perhaps in the form of AI, that are helping automate some of the steps that need to be taken as part of the two different threads that you mentioned earlier?
I think from a tool perspective that's specific to I think the number of options are limited. I can't even name one today, Ankur, that would help us do those processes. So today the process is typically I'm utilizing multiple systems to do different things. I may have to go to one tool to do KYC, KYB, and OFAC. I may have to go to another tool to do web content monitoring. I have to go to another
Hmm.
tool to do business verification, BBB complaints, other negative news. We're utilizing multiple systems, which can, create a very long and difficult process. And that is one reason we brought this process in house, is to give us more control over
Hmm.
that time frame. But we still have to have the right tools in place to be able to do it, you know, quickly and efficiently. And I think that's a challenge.
I love that problem because every single company in this space does the steps that you've mentioned, right? So the problems are they're repeated across the industry. And there are what I call point solutions, as you mentioned, that help with each of those aspects. But you do need people, human operators that go and do those steps. And that creates fragmentation, it causes inefficiency. And when we think about AI, and particularly the term that is common now is agentic workflows, how do you have AI do different, what I call series of actions that are valuable because it helps really solve more, I would say, end-to-end processes. So if you do checking of bad actor lists, that's one. Checking web content, that's another. Checking the other downstream things on the checklist as part of this process, you can have an agentic workflow built with each of those components where you have AI do as much of this as possible and mark things as complete and verified, or mark something as this is a red flag. We actually need a human to go and do a second review, right? And so you can have some level of assistance and some level of automation built in, so that human operators they will still be involved, particularly with maybe the final eyeball check on the entire process, but more of what they do can be pre-done, pre-filled, and that shaves countless amounts of time and back and forth that's taking place today, right? And I think that is the beauty. It's like, how do you enable people to do the work that they do more efficiently than ever before? Because if you can do that on these type of workflows, it delivers very novel experiences, not only for the customer, but certainly for the employees that are doing this work today.
Yeah, and I think your point is 100% spot on, because AI could support this payments industry we're in, because as you said, the requirements for our shop and any other shop are very similar, because we're all being overseen by the same bodies, be it different banks, Visa, MasterCard, the card brands. We all have those same requirements. It doesn't change all that much. At the end of the day, we all have to do certain things. It's not like I can decide not to check the OFAC list. I have to do that. We all have to do that.
Yeah, yeah. Yeah. And on the financial underwriting, I imagine the types of documents that are submitted are similar in the sense that you probably have balance sheets, cash flow statements, P&L statements, and maybe some revenue numbers that are necessary, transactions of part of that. They can come in different formats: CSVs, Excel files, maybe some are API feeds. But at the end of the day, the nature of the data that you need to review is similar. Now, the underwriting process may be different in the sense that you calculate ratios, but like what type of ratios you calculate, how many bank statements you need to look, how many months back, they can differ. But at the end of the day, people are looking at financial data to assert that their underwriting criteria is met. Again, an area where I imagine AI could be used. So I'm curious, Lance, how much of this is still very manual, people checking the numbers, versus you have some degree of tooling to help people, to assist people as part of these processes?
It's very manual, Unker. I mean, there's a million different ways that you can spread financials. You know, different companies doing it different ways. How do you calculate the risk of this merchant? What's the exposure? But it's still, at the end of the day, an automated tool would be somebody's created a spreadsheet that's got formulas built in. That's about as automated as it gets from my experience. So that is an area where I think AI could really help. Is help, you know, help somebody analyze the financials, and it also bridges that gap. You take a more traditional, low level, quote unquote, underwriter, and then ask them to go from just the check the box exercises to actually reviewing financials. That can be quite a step. I think AI
Hmm.
could bridge that gap, and it would also give us more consistency. Does one underwriter review the financials differently than another? Whereas if we're all using some kind of AI system,
Yeah.
it would automate and give us better results.
And what I love about this is that you don't need to go and solve this entirely from day one. all the different components that people operate. You can go and do this in phases. And if you do it right, where you have this beautiful interaction between the AI and the automation and that it delivers, coupled with what people are doing, so it's assistive to them, right? It helps augment them with great tooling. They could move more quickly, and over time, you can go and do more and help them more in other areas. But it doesn't have to be like all or nothing, right? You could do it in tranches. And I think how you
Yes.
manage that process, how you start doing one tranche and then deliver the next tranche, and how you do the change management piece, which is get the individuals adjusted to using this tool, make sure that it lands and delivers value to them, that they have a really great experience. Because they're the end user. We're trying to make their experience better, because if we make their experience better, they're going to be able to do more work in less time, which is ultimately going to then affect the customer experience, and then which will affect the health of the organization at large, right? So I think the staggering and the phasing of this introduction of this technology and the change management piece is absolutely pivotal. I'm curious, like internally at this point, obviously generative AI is huge, huge topic. Machine learning's been around for a while. What prevents more adoption, more experimentation right now with some of this technology? Because it feels like, based on everything you're saying, the need is there, but it still remains maybe an open market, an unaddressed problem today.
Yeah, I think it's multiple. I think it's a bit of lack of understanding of what tools are available to us. How do we integrate the AI into our existing technology? I don't think you completely move away what we've been doing historically, but integrate AI into the day-to-day process. That and building something that is compliant. I mean, there's a lot of oversight in the things that we do. You know, you don't, you can't process payments without a bank sponsor. And then the card brands have their own rules and regulations. I think it's a bit of an unknown. I think there's a lot of education that needs to happen, not only in the payment processing space that I'm in this industry, but with the card brands, with the banks that support us, so they can understand what AI can do for us. Not too long ago, I heard, right or wrong, that the card brands considered AI underwriting, as one example, as non-compliant by
Hmm.
itself. Like you
Yeah.
couldn't do underwriting alone with an AI tool. There would still have to be the human intervention aspect to it. But I think we all need to learn more and understand what's available to us in this industry.
Yeah, yeah. I think you need to have an appreciation that this is a regulated industry. The work here is very sensitive. It's You can't just throw AI at the problem, and there's no way to make that happen and be successful. And I think the challenge is the awareness. Like, where could AI be helpful? What tool? How to introduce it? How to make sure it's done in a compliant manner? Like all the things you're mentioning. And I think one major piece that I think a lot of people forget, and I think that you've mentioned here, Lance, is the piping is really important. So how you go and feed data from what people are doing to an AI, and make sure the AI piece delivers one aspect really well, and that gets back into the flow that human operators are involved with. Because you can't throw this entire problem at like a chat GPT and hope to get this solved. It doesn't work that way, right? So how you
Right.
inject AI and what components, and how you kind of pipe that data to and from AI and human to ultimately go and do that workflow automation piece is really critical. So I think a lot of this comes down to integration, how you do the piping of AI into the process. And that's a really complex problem, right? It's not a trivial problem. It's not an overnight fix. I do believe that this is a multi-year long journey, but it's certainly worth undertaking, because the problem is very real, and if you do deliver value to the people that are doing this process in small ways at first, and then eventually compound the gains, in a couple of years this could be a wholly new process. That I do firmly believe that today.
I do as well, and I feel like if we don't, we're going to be in a bad spot. I mean, going back to the discussion around the fraud piece, I mean, there's so many negative things that come out of it. I've seen AI generated bank statements that you couldn't differentiate from a real one. So if we sit back and not catch up, we're going to be at a real disadvantage. So you're right. I think it's going to take some time, but not too much time to get caught up and stay,
Yeah.
again, back to being a proactive risk manager or underwriter. That's going to serve us all much better than being reactive.
Right. Yeah, and the bank statements problem, one example is you could pick up the account number and hit another API to see if that's a legitimate account number, right? With the right
Right.
routing number. So at least you could do account verification there. You could even pull up balances potentially if you have the right authentication. So there are ways you can go and check that if you feel like there are a couple of red flags. Any one red flag might not be enough, but if you see a couple of red flags, I think then there's higher risk of potential fraud. So being able to do that systematically, very, very important because human operators, they're strapped for time. They only can have so much awareness. They're not going to be able to see all of these little things that by a single instance, it might not be meaningful. But if you see a couple of different red flags or yellow flags along the way, it might be meaningful, right? And I think that's where AI is really powerful, is seeing patterns in a lot of what I would say high dimensional data, and then helping flag to a human operator, hey, go spend more time because things are they don't look right. They could be right, but we just want a second pair of eyes, right? And I think that's really important. I think what you mentioned earlier is also true, which is the regulatory environment is such where humans will need to remain as part of the process, and frankly, it's safer to have humans as part of the process. But they should be involved in the later stages, the review, the final pair of eyes, more of the what I'd say the administrative work that they have to do. That's very well suited for large language models to be able to handle. They can do document reasoning, document understanding. They can help make some simple decisions along the process. And so when it gets to a human operator, some of the simple work has already been done, and now the human operator is doing the more complex work as part of that process today.
Yeah. And I think it creates a lot of consistency where if all the different risk analyst underwriters have the same tools, that helps them make more consistent decisions. You may have one risk analyst who's more conservative than another, working more afraid than another, taking those red flags and then turning a 5 minute review into an hour review, and then all of a sudden going from, I think this transaction is legitimate, to maybe I'm going to talk myself out of it and I'm going to put some kind of a hold on it. It creates that consistency. I also think about, as you were saying that, could you learn on the back end? Could there be a process where you do almost a retroactive review on losses that you take through AI? Where did something go awry? Where could we have caught this on the front end if we had this rule, this technology, whatever it was in place, comes to mind?
Yeah,
Like a
absolutely.
triage.
Today, when you look at the inclusion of technology like AI to help out the organization, what dimensions do you try to calculate some return on investment, right? I think the one that comes to mind a lot of times is AI is going to help reduce costs, and it's like operating margin improvement. Is that the primary way of looking at this, or are there other dimensions that you consider this decision?
I think about the day to day. I mean, you think about your application approval rate on the underwriting side. Certainly, credit and fraud losses would be an impact to the bottom line. And you mentioned earlier the balance, like how much time are we spending on alerts? Are we able to reduce our false positives from 500 to 1 to 100 to 1, so we're being more efficient and working, on the risk side more effectively and reducing those losses? But I also think too, I mean, there's got to be the understanding that there will be a cost component to integrating a tool like this, and maybe it takes time for it to gain that return on investment.
I think that's right. I think initially it is a cost because you're spending time of internal resources on the business side, on the engineering side. And if you decide to work with an external vendor, then it's a vendor cost. Regardless of whether you work with an external vendor or not, there's the compute cost and the storage cost. So there's going to be additional costs. But I think the way that a lot of companies have started to look at it is that it is an investment in a newer technology. No new technology is without risk, so there is going to be some cost of just learning how this technology works. But the early signs is that when done well, when applied to the right problem, it does deliver immense value. It's a night and day kind of comparison in terms of the value that's created, and I think the frame has also changed to. And it's not just a cost reduction play because initially you're not looking to reduce headcount or modify personnel. Usually organizations have really great talented people. They add a lot to the organization. They are very valuable. No organization is trying to get rid of their very valuable people, but over time you're making the people more productive, more efficient. They become more superhuman at what they do. That means you can handle more business with the same amount of people. And then frankly, the customer still has a better experience, even if your customer count doesn't increase, because it's taking less time. They're getting decisions quicker than ever before. So there's novel experiences that are happening. And as you start becoming known as a company that is more efficient, better at turning around decisions, having better, what I'd say, like NPS scores with customers, you do start capturing more revenue as a result, right? So it's a revenue enabling play. It's an improvement of customer experience, which helps you capture more revenue, but retain more revenue as well. And then employees are happier because they're actually doing less grunt work, right? So these like expansion of how you look at value and how you look at ROI, I think we're starting to see that play out, which I think what you mentioned kind of speaks to that as well.
Well, I think you're right, and it's not unique to this technology, whether it was AI or machine learning or neural network technology. That all those tools take time to build and assess and integrate, right? And then, going back to your question around like cost savings, what I was thinking about as well was we might be utilizing today half a dozen different systems to do underwriting and transaction monitoring. How much is each of those different systems cost monthly on just from an invoicing perspective? Timing as an analyst have to go from tool one to tool two down to six versus potentially the ability to do it all in one system like an AI, and can AI take all those different data elements and help you make your decision in one system, in one core area?
Yeah, it's funny. I think there's been this explosion of software and SaaS vendors, in especially in the past 10 years, right? Where you brought on different vendors for different things, and before you knew it, you had far more vendors than you ever thought. And sometimes they do duplicative things. Sometimes the ROI isn't quite there. You thought it would be. Maybe initially there it was, but then your view of it changes. Um, I think what AI and generative AI and all the things that are coming out, what it's likely able to do is that it is going to be the connective tissue that does more of what you need to do using a single piece of technology. You might be able to consolidate your vendor set, and that is really really powerful, right? It makes you more nimble, more efficient, scales down the number of vendors you need, and I think that's going to play out, right? I think the vendors and the software that you have today, that is doing one small thing in isolation, may not be adding quite enough value. What you really need is something that can go and tackle more of the things across the organization. And to the extent that you could have fewer vendor relationships that could manage those threads, I think it's going to just be easier to manage as well. I think that's the value that AI is bringing to the table. Lance, on the fraud side, how does that work? Because I think you did a great job laying out the KYC, KYB portion, as well as the financial underwriting. On the fraud side, what are human operators reviewing? Are they doing it real time, or like how far after a payment attempt is made do they really intervene?
It's a combination, Ankur. It really depends sometimes on the systems you're utilizing. There are real-time systems which can be risky because if you are making a bad decision and inconveniencing a merchant or a cardholder, that can create embarrassment. There's also systems that are they're real time, but they're one delayed, meaning you give up that first transaction as fraud, but then you can decision after the fact. But it really depends on the types of systems that you can utilize, what's available to you, either internally if you build your own, using a third party system, which I believe is a lot more common. And then those results are only as good as your rules. A lot of these systems will come with, default canned rules, and then you have the ability to write new rules based on the behavior of your merchants and your customers. But that's ever changing. So if I don't have something that's doing it for me in a systematic manner where that model is learning from the behavior of my customers, that could be a full-time job for an individual to continually refine those rules. And again, are we back to refining rules based on, oh, I just got burned by this fraud pattern and we're being reactive again?
Yeah, that is. I think that is a very interesting point, which is rules used to be the way to handle this before machine learning, before AI. And the challenge with the rules was that you design rules based on previous patterns, but by the time the rules came into action, the fraudsters would do new things to go circumvent the rules. And so you were this constant game of trying to design new rules to capture new types of fraud and new types of fraud patterns. I think this is where machine learning excels, where it can learn from fewer patterns, it can identify anomalous patterns, and even if you don't have them in your rule set, it's helping at least flag this as a potential situation for a human operator to investigate. And I don't think you necessarily need to replace the rules, right? The rules can still serve purpose, but this allows another more flexible layer as a layer of defense, right? That can help catch bad actors perhaps more proactively, especially the new patterns that are coming to light.
I agree. I mean, you've got those rules that serve you very, very well, but you have a safety net, as you said, for other rules that may not be firing and acting as they should.
What about the compliance side when it comes to AI? How much of that is coming internally from your organization versus regulators external to your organization that are setting the playbook for how to bring AI, how to do generative AI, whether you use closed source models versus open source? How does that work today?
Honestly, Ankur, it's really driven by still the banks and the card brands. They're, even though they're not internal to our companies, they are the governing bodies. At the end of the day, it's the bank that is the acquirer in the minds of Visa, MasterCard. So it starts with the bank. So whether the bank is overseeing your credit policy and types of merchants that you can support or not support, they also are, they're giving you very much the direction from the compliance perspective.
And is that direction today clear, or is that playbook still being built as time goes?
It's far from clear. It's definitely, being aware of notifications, bulletins, alerts that, roll downhill from potentially it could come from Visa MasterCard, could come directly from the banks, could be a government requirement. There's many. It's a matter of staying in the communication loop. One thing that makes that easier in this space that we're in payment processing is it's a small industry, but it's also a very close knit industry. One thing I wanted to make sure I brought up in our conversation was it's not uncommon for us to share our secrets. If I was in sales, I wouldn't share my secrets for selling with somebody else. But in risk and underwriting, it's a very tight knit community, and chances are, if somebody's experiencing fraud pattern or an underwriting challenge at another shop, it's coming our way. So we tend to share secrets, share best practices. There's a lot of networking. There's alerts and systems that we share where we're kind of fighting a common enemy, if you will. So that makes that the day-to-day helpful, as well as staying abreast of new compliance regulations.
I think that is something that is both an opportunity in the sense that you need to go and define the playbook, and others need to define the playbook of how AI is adopted. But it is a risk to adoption, I think, in the sense that if you don't know what the lines are, what the black and white ways of operating are with AI, you're more risk averse, right? Because you don't want to make the wrong misstep and then the rules are defined and then you're on the wrong side of the rule. I think, if I just draw an analogy, I think crypto suffered from this, which is crypto was unclear what the rules were, what was a fraud issue or non-compliant issue versus what was compliant. And I think a lot of serious players shied away from crypto adoption. And I think AI, I think there's maybe less concern in the same way that people were concerned about crypto, but there is some of that. It's like you don't want to go all in and adopt this, particularly use it in production, if you don't know where the compliance landscape will land, you don't know where the regulation will land. And I think that's something that might be a headwind for AI adoption right now. And the hope is that the regulatory bodies and the compliance bodies roughly get this right. They don't have to get it 100%, but they do need in some ways to give enough clarity for organizations like yours and ours here at Multimodal and other players to be able to figure out the right path forward here.
Absolutely.
What about the future trends that you're seeing around payments, right? So I think we talked a little bit earlier on around there's a lot more around fintech innovation that's possible in payments. We certainly mentioned AI. Are you seeing other trends that you're excited by that you think would really help the payments industry evolve over the next, let's say, 3 to 5 years?
Yeah, what comes to mind are you know alternative payment methods, a lot around different kinds of payment mechanisms. Be it embedded payments. The You mentioned software as a service.
Mhm.
The this ISV market. There's a lot of like non-traditional payment operations that are coming, and figuring out ways to support those different payment companies, and in a way that is still quick and efficient. We still have this constant challenge of, can you underwrite me with less information and quicker?
Yeah, and I think that's right. I think that there's more adoption when it's easier to underwrite and quicker to underwrite. And then the opposite side is you then need to be very good at catching fraud and bad actors, right? So you're not taking
Right.
advantage of. But they go hand in hand. If you're too paranoid and your systems to catch fraud are poor, that means you need to have a more onerous underwriting process. So to have a simpler underwriting process, you need a better fraud detection mechanism,
Well,
which can afford you.
and some companies do just that. There are plenty
Yep.
of shops, the term we use, where they do underwriting light and then just monitor the heck out of it on the back end. Very common practice.
So with what you're doing at eBiz today, how far along are you in that move to wholesale? And what are some of maybe the open challenges that you're facing? You don't have to necessarily go into specifics, but curious what makes that process hard today?
Sure. I mean, we're on the if I could use a football analogy, we're on the 1 foot line in making that transition. So I can only speculate at this point. I think I can foresee, based on the tools that we have available to us, a a bit of a manual underwriting process, because we're limited to either the tools that we can integrate into our day to day, or tools that may be available to us with the partners that we work with. As we launch, our partner has a built-in risk system that's going to be available to us. So it's very well integrated and does a lot of the things that multiple tools might be required to do. But on the underwriting side, that particular tool is not available to us. So we're back to this, utilizing 3, 4, 5 different systems to do our day-to-day underwriting, and it's going to be a manual process.
What makes it easier or hard to work across the system? So I imagine that um, you have different vendors, different software. If there's not a good way to pipe data, and I kind of like that visual where it's like the one part of the process is complete, and then you're able to use the context that you need to go and make the another software vendor kind of go and have the right data to kind of move things along. How much of this is a problem because the systems don't talk to one another, right? There's not API integrations that are native that could be built out. How much of that is a problem versus even if the API integrations were there, it's just a very hard problem, which then necessitates requiring multiple tools to address.
It's very much a problem, because there's different layers of integration. You could integrate that tool into your system, right, for day to day for the risk analyst and the underwriters, but is it also integrated into your CRM?
Mhm.
There's other folks that need to see that data. It's not that uncommon for a customer service agent to be the first person to speak to a merchant who's got a concern about a risk issue or an underwriting issue. So it's got to be in. It could be not only integrating it into your day to day, but get it into your CRM system, whatever that might be. So there's multiple layers that can occur. So that is a real life challenge.
Well, Lance, it's been incredible chatting through some of the progress in the space and what we're seeing AI do in terms of improving the entire process from underwriting to the fraud. And then I'm very excited by this transition that you're going through. I'm hoping that the 1 year line doesn't prove to be too difficult, and look forward to more conversations to come. For our viewer, where could our audience learn more about you and EBizCharge? We'll make sure to include that in the show notes.
Sure. I think the traditional methods, LinkedIn, our own website. I mean, eBiz is a very unique company. We're not just a payment processor. If I would give us a little bit of a plug, before anything, we really are a development shop. We have very strong developers, and our niche that I didn't mention at the beginning was we focus on B2B customers that are using different ERPs. So QuickBooks, SAP, Microsoft Dynamics, those types of tools to
Yeah.
do their accounting, if you will. And then they have a need to take payments. That's a niche that we have served very, very well. So we're not it'll take a little bit of digging, but we've got a really great staff, good technology, and hoping to do big things as we move to wholesale.
Yeah, I'm excited for this. Well, great. We'll make sure to include that in our show notes. It's been a pleasure having you on our board and having you on the podcast. Thanks for all your contributions to date.
Oh, it's my pleasure.